JP Morgan Private Bank U.S. equity strategist Abby Yoder. It's interesting to say that one single name, and we've kind of seen this in past quarters years ago with certain names like GE, I'm thinking in the 80s and 90s, but one single name, NVIDIA, could really color the entire market.
Well, I mean, I think this concentration issue that has been, top of mind for a lot of investors over the past really 2 to 3 years keeps coming up, right? And I think what differentiates today versus the time period that you're talking about, maybe like the dot-com era, is the fact that there are real earnings behind these companies, right? Like if you look at what is happening in terms of market share concentration, you can see the top 10 names in the index make up like 30 to 40% of the market cap. But that line that goes straight up into the right in terms of their concentration is also followed by their earnings contribution, right? So tech and comm services make up 45% of market cap today. That was, 20% in 2005. So and they make up 35% of earnings versus 15% in 2005. So it's matched by the earnings growth.
It's interesting to watch these names, and whether it's NVIDIA or Advanced Micro Devices coming up fast. I mean, you could figure that NVIDIA is starting to feel AMD's breath on the back of its neck in the track meet here, that we've seen that there's so many names that are partaking in all of this, but now it extends well beyond that. When you at JP Morgan look at the next potential sectors that maybe bask in the reflected glory of AI, what do you see? Where do you like to put clients' money at the moment?
So outside of tech, and I think you make a very good point in the sense that the race just really seems to be on. It does not seem to be stalling. Nobody wants to get left behind in terms of where they are in this innovation cycle, because it seems like it's make or break it, right? Like you really need to incorporate it into your business. And I think when you think about where it can be most disrupted, you have to think about the task exposure, right? And that's going to be a lot of white-collar jobs in terms of the input that goes into their work. And so financials really stand out in terms of the way that they can expedite and more efficiently process a lot of the processes that they have. And then I guess tangential to that in terms of really thinking about who helps in this build out, that would be, the utilities companies that are helping to power that whole AI generation, right? So the tech companies are the ones that are really powering the spend and the actual creation. And then you need these utilities companies to actually provide the power for the data centers that are behind all of it.
I feel like you guys, as equity strategists, are in a whole new world. I mean, we still have, this is a live picture of the White House right now. We still have the cabinet meeting going on. Maybe in past years, you weren't paying that much attention. Plus, it was never really televised like this hour after hour. But you now have to look at tariffs as they affect equities. You have to look at the potential firing of Lisa Cook, the Federal Reserve governor. How has your world changed, and why should investors in stocks be as aware of what's going on in D.C. as they are of what's going on in their portfolio?
Well, I mean, it's certainly dynamic, I would say, in terms of our job on a day-to-day basis. But I also think, we just made it, we're almost done with earnings. Obviously, we have some companies left to report this week. But, it's been so interesting to hear from the companies over the course of the past couple of weeks about how they're navigating how difficult this environment is, because just as we have to watch, so do these companies. Then they have to actually put it into their business and then think about how, put those inputs into their business and think about how they're going to mitigate that. Are they going to pass on prices? Are they going to take that hit in terms of their margin, right? And so we just had a really stellar 2Q earnings where we had earnings beat by 8%. Over 80% of companies were beating, right? It wasn't just these tech companies.
We saw that.
Yeah, so
revenues
it's just
looking really good.
Exactly. And so I think it's just, this is really showcasing why the U.S. equity market, large cap U.S. equities, have outperformed the way that they have, right? They really are very well positioned to take on what is a very dynamic environment. And it's been that way for 5 years now.
The president's making comments about Intel and the government's 10% stake. They still talking about it, Brad? Okay, let's listen in just for a minute, because Intel's moving lower by 1.5%.
Other countries or do those deals with that. I would do that. I think it's great. It's good. Builds up our balance sheet. Let me tell you, our country is becoming very rich again. You don't see it. When the CBO came out on Friday and said, we just found $4 trillion, and that goes to reduce our deficit, $4 trillion, and it was from the tariffs. Our country is becoming very, very rich again. I hope you get used to it. You're going to have to get used to it.
So what the president just said, and in fact, we took it just a bit late, but he said that when he was speaking to the CEO of Intel, Lip-Bu Tan, he specifically
we have a
said,
lot of money coming
hey,
in, rebate
how
check
about
for the
taking a
United
stake? And he threw out 10%, and he claims that Louboutin said, sure, we'll give it to you. But again, these are the types of things, Abby, that you have to really pay attention to at the moment.
Yeah, I mean, but again, we always bring it back to fundamentals, right? Like, and thinking about what happened with earnings. And not only that, we didn't just get a really strong quarter, right? Like, that's backward-looking in nature. I mean, it showcased the ability for these companies to navigate what is a difficult environment, but the guidance was very positive in terms of what they were seeing, and particularly related to the reconciliation bill, right? And the ramifications of that from a tax and cash flow perspective is very important for these businesses as well, and they have clarity around that as well, and that's growth positive when you're thinking about it for 2026.
Yeah, and anybody who's tried to write the epitaph for this bull market has been wrong. Yeah, I mean, so put down the chisel. Although maybe you just don't know, we get a black swan of some type, and you just never know. But Abby, thank you.
Thank you.